We are so excited to be speaking with you today and to provide you with our outlook for the market for the rest of 2021. Many of our clients have asked us an important question: does this market have any more room to run? The short answer is yes. We remain cautiously optimistic about this market throughout 2021 and into 2022. Over the next few minutes, we will discuss why we believe this market has more room to run.
Our process for assessing current market conditions and the future outlook focuses on two key areas. One, market fundamentals, and two, macroeconomic conditions. Market fundamentals are still strong. Yes, valuations remain elevated when compared to historical levels. However, the reality is that the market is pricing in anticipated strong earnings growth in a historically low interest rate environment. Both tend to bode well for the equity market, and both are headed in the right direction. Earnings results are strong thus far. We're in the midst of the first quarter earnings season announcements, and 25% of companies in the S&P have reported results as of the end of last week. 84% of the companies reporting have had positive earnings surprises, with the surprise of 23.6% above estimate. As a point of reference, the 5-year average earnings surprise is 6.9%. So we're talking about pretty strong earnings surprises to the upside. Consensus estimate is that analysts are expecting the S&P 500 to reach 4554 over the next 12 months, which is about a 9% increase from today's price. We believe this is achievable given earnings growth projections for the remainder of 2021.
Macroeconomic conditions appear to be favorable right now. We're in the midst of a rebounding economy, with economists estimating that GDP could grow as much as 6 to 8% this year, which, if that happens, it will be the fastest growth rate since 1983. And the labor market is getting stronger too. To be clear, there's still some slack in the labor market, but job openings, as measured by JOLTS, have now surpassed their pre-pandemic levels. We also believe that the Fed will continue to be committed to accommodative monetary policy and low interest rates. And actually, just this past Wednesday, Fed Chair Powell reaffirmed his commitment to these goals. While the macroeconomic picture is favorable right now, there are still some key risks that we are acutely focused on. 1, inflation, and 2, changes to tax policy.
It's clear that we're seeing an uptick in inflation. March CPI was plus 2.6%, which is higher than February CPI figure plus 1.7%. A lot of this has to do with how inflation is generally measured, which is year over year. So the point of comparison is depressed. Most of what is driving the uptick in CPI is actually producer price increases from bottlenecks in supply chain plus global logistics issues like what we saw at the Suez Canal. We believe that these are transitory and will subside later this year. Remember, supply side is only one side of the inflation equation. While there has also been an increase in demand over the last few months, we believe this too to be transitory. There is still a good amount of slack in the labor market, which should subdue the potential for a significant uptick in inflation over the short term. So for now, we are not too worried about inflation. We believe that once the distortion is out of the CPI figures, inflation will be at a healthy figure at or around the Fed's inflationary target of 2%.
The other major risk to the market is tax policy. We're in the process of digesting and analyzing the Biden tax proposal, as well as the probability of such broad sweeping tax policy actually being enacted into law. In the coming days, we will be sending out follow-up communication on this topic.
Spring is upon us here in Indianapolis, and the Indianapolis 500 is right around the corner. Grass is getting greener, and the flowers are budding. Spring has always been my favorite season for these reasons. Given all that we have endured over the last 12 months, this spring seems extra encouraging and extra promising. From all of us at Evans May Wealth, we wish you a healthy and prosperous remainder of 2021.